Hello and welcome from Trend Signal for our review of the data and events the week beginning of the 11th of January, the second week in January. Probably quite glad to get the first week out the way, certainly for equity traders. Probably the worst start for the markets in over 2 decades. Say markets, obviously it's not just equities, but they tend to attract the most attention. But industrial commodities, crude oil products, all being slammed. Chinese economy very much in the spotlight as data reinforces concern that the economy continues to slow. This obviously matters because China is the world's second largest economy and is really responsible for the world's growth engine, as it were. But a massive dose of risk off in the new year, risk off, equities down, and haven currencies in demand such as the yen, and Swiss franc, and to a lesser extent the euro. But for the record, the FTSE was down 170 odd points last week. The Dow over 1,000, the S&P 122, that's 6%. The DAX a whopping 893 points, or 8.3%. The Nikkei, with a very strong yen, suffering as well, down 1,335 points, or 7%. So with some extraordinary falls. Currencies, well, the yen particularly strong, down 300 pips versus the dollar, I should say, down. That's fewer yen to the dollar, so that's strengthening by 2.5%. The Aussie dollar down 339 points, 4.65%. Massive falls as concern over the slowing Chinese economy, which the Australian economy is very much dependent on. Gold, not surprisingly, safe haven, up $42, up 4%. But the real story from the commodity sector was a slump in oil again. At $37, it still managed to fall $4.50, $4.60 last week, 12.5%. These are big moves. And copper, yeah, base metals, that got absolutely trashed as well. Copper had been rebounding a little bit between Christmas and New Year, but last week 119 pips. Doesn't sound a lot necessarily, but that's close to 6% fall. So you can see an extremely turbulent start to the year, and it doesn't seem to be over yet either. Monday morning, Chinese equities slid again overnight with the Shanghai Composite down 5.32%. Quite a surprise in a way when you look at what happened with the US unemployment data. A lot of questions have been asked, well, if that was so strong, why did the US fall? For the record, 292,000 jobs added in December in the US, which was way better than forecast, and with September and October numbers revised higher by 50,000. So very strong by any measure. In total, the US added 2.7 million jobs last year, which is the biggest jump since 1999. So market reaction a little bit difficult to understand. I guess the initial reaction was positive, with equities jumping and yields on treasuries spiking higher, but pretty quickly the market melted, with US indices suffering further falls after the European market shut on Friday. So it seems good news is bad news. A strong number that analysts decided will just fuel the arguments for another rate hike in March by the FOMC, the rate setting committee of the Federal Reserve. I guess another explanation for the reaction is simply that the bearish mood is all pervading really, and is stronger than any positives that a number like this instills. The resource sector really is the one that is where all the focus is at the moment. Base metals and oil, as I said, killing the mining sector and the oil sector. Extreme weakness in resource currencies and markets. The Aussie and Canadian dollar smashed. The Aussie stock market is in the mix for the second spot for worst performing market, with the ASX 200 falling more than 7% this year. Got actually absolutely trashed on that Monday day, or overnight in for the UK, and hitting its lowest level in 2.5 years, with what was described as a bit of a frenzied sell-off. Other notable news: sterling fell sharply as interest rate expectations were pared back, and obviously fears about possible Brexit continue to mount as the poll evidence points to a strengthening no vote, which is is debatable at this stage, but certainly prior to the new year, expectations were for the first rate hike in the UK by the autumn this year, but now markets are predicting that the first rate hike won't happen until early 2017, hence the reason for the weakness, excessive weakness it looks like in sterling. Data and events this week, let's have a look at our calendar. The week after non-farm payroll is particularly quiet normally, and that just demonstrates it looking at our calendar here from Forex Factory. The main events really this week, certainly for the UK, will be the interest rate decision. As you know now, the minutes are all published at the same time. We're not expecting any change, obviously, in rates here in the UK, but again, it's the minutes that will add to the interest for the markets. So that is something to look forward to at 12 o'clock on Thursday. Probably the most important day of the week for the markets in general, notwithstanding it looks like the Chinese situation is overriding everything for the time being. But on Friday from the US, we got retail sales, slightly softer number. Producer price index, that's the cost of goods and services going into production, obviously leading indicator for inflation, very low, minus 0.2% there, so of absolutely no concern there. If anything, the concern is that it's too low, obviously. And then, as I say, well, we got retail sales, that's coming in a little bit weaker than expected. Oh, that's a prediction anyway. It's the core number we have to look at. And then another number, the preliminary reading on the University of Michigan consumer sentiment. Consumers are happy. Businesses tend to be happy. If businesses are happy, central banks are happy. A very useful number to watch. And for oil traders, obviously crude oil inventories as usual, 3:30 on Wednesday afternoon. Crude oil still very much in the spotlight, obviously, having slumped 12.5% already last week. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.